Why 90% of traders lose. Today, I'm going to explain why 90% of traders are losing, and more importantly, the fatal mistake most traders keep repeating day after day on the charts. In this specific example, the majority of traders will enter a sell trade immediately simply because they see the appearance of a bearish engulfing candle. In their minds, the logic is simple. Greater than bearish candle equals price will go down. But the market doesn't work like that. And this is exactly where the problem begins. So if today you want to learn something truly valuable, take the time to watch this video until the end and consider subscribing, because what I'm about to explain is what separates an amateur trader from a trader who truly understands the market. One candle does not define the market. A single candle, even an engulfing candle, never represents the market on its own. A candle is only a consequence. It is never the cause. Before entering any trade, we must analyze the overall market context and, most importantly, understand why this candle appeared at this specific location. The market never moves randomly. Every candle is the result of an imbalance between buyers and sellers, and that imbalance always occurs within a specific context. If you don't understand the context, then you are trading blindly. Market context and structure. When we take the time to analyze this move properly, we can identify several very important technical elements: a break of structure, the creation of a fair value gap, a sign of inefficiency, an untested order block left behind by price. Just above, a new demand zone forming, all followed by a third bullish impulse showing buyer strength. And this is very important to understand. Despite all these elements, we still do not trade. Why? Because the role of a professional trader is not to chase price, nor to anticipate a move based on emotion. His role is to wait for price to return to a value area. Patience before entry. At this stage, our plan is clear and simple. We wait for price to return into one of these key technical zones: the fair value gap, the order block, or the demand zone. Only then does the market begin to speak to us. And at that point, two very clear scenarios can occur. Scenario 1. Bullish continuation. Price returns into the zone, it reacts properly, showing bullish intent. We then get confirmation respected structure and a clear opportunity to enter a buy trade. Scenario 2. Trend reversal. On the other hand, if price breaks the last low, this confirms a change in market structure and completely invalidates our bullish bias. In this case, we don't force anything. We simply adapt to what the market is showing us. Why this low is crucial. This last low is not a random level. It is fundamental. Why? Because it is the exact level responsible for the previous break of structure. It is the point that allowed the market to create a new impulse. As long as this level holds, market structure remains valid. The bullish bias stays intact, buyers remain in control. If this level breaks, then the entire scenario changes. If you want, I can make a full video explaining how to correctly identify real highs and real lows. Just let me know in the comments. Reversal confirmation. Later in the move, we observe something very interesting. Price returns into the second zone. It gets clearly rejected, without breaking the existing structure. This is a strong signal of a bullish reversal. At this precise moment, the work becomes more precise and more technical. We drop to a lower time frame and look for a clear confirmation candle or a clean reversal pattern. This is where the cleanest entries are made. Trade management. Once in the trade, stop loss placed logically at the invalidation level. Take profit set at the previous high. No magic, no overtrading, no emotion. Just a clear plan executed with discipline. The real lesson. This is how you analyze the market before making any decision. You do not enter a trade simply because you saw an opposite engulfing candle. In the long run, technical analysis alone is not enough. To become truly profitable, you must also master psychology, money management, discipline. Without discipline, even the best strategy fails. If you want to improve every day in your trading journey, subscribe to the channel, like the video if it brought you value, and most importantly, stay disciplined. See you in the next video.